Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
End of the trading week. Welcome to Modern Investing Techniques, episode 74. I'm Patrick in Vancouver. Today is June 12th, 2026, last trading day of the week. Let's review the week and set up for next Monday. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Bank stocks stand to gain trading revenue from SpaceX and other mega-IPOs, creating a rotation opportunity inside TFSA accounts today. The S&P 500 closed at 7,394, up 1.8%. The NASDAQ Composite closed at 25,810, up 2.5%. The TSX Composite closed at 34,672, up 1.5%. World shares surged following President Trump's announcement of progress in talks to end the Iran conflict. Oil prices dropped more than 4% in response to the news. Global equities rose as risk appetite improved with reduced geopolitical tensions. The development comes as the Bank of Canada prepares for its next decision in 2 weeks. Markets are pricing in steady rates from the central bank. U.S. earnings season is ongoing, with volatility tied to IPO activity. Trim energy exposure in RRSP accounts if WTI closes below its 20-day moving average. Source: bnnbloomberg.ca. Financials led breath on expectations of elevated trading desks, while energy lagged on the oil drop. The Bank of Canada's next decision sits 2 weeks away, with markets pricing in steady rates. Our simulated portfolio sits at a cumulative $396.68 across 34 trades, delivering positive alpha of 21.2% versus the NASDAQ across 27 benchmarked trades. Mega-IPO windows create concentrated trading revenue spikes for large banks that retail investors can capture through sector ETFs rather than single names. Today's announcement of SpaceX, OpenAI, and Anthropic listings at elevated valuations directly feeds the JP Morgan thesis that Goldman Sachs and Morgan Stanley will see outsized Q2 trading income. The practical implementation is to screen the financial select sector SPDR or XLF for banks with the highest institutional trading revenue weightings and add on any pullback below the 50-day moving average. This approach has historically delivered excess returns in the 4 to 6 weeks following blockbuster IPO windows. It carries the risk of rapid reversal if deal flow stalls. Position sizing should stay under 5% of TFSA equity exposure to avoid sector concentration. This trade demonstrates how to translate a sector-level revenue catalyst into an ETF position that avoids single-stock IPO risk while still capturing the theme. Listeners learn to map macro events like IPO windows directly to ETF holdings rather than chasing individual names. This is a simulated trade for educational purposes only. The pick is XLF, the Financial Select Sector SPDR Fund. The catalyst is the JP Morgan note highlighting overlooked trading income for Wall Street banks from the record IPO pipeline. The technical setup shows XLF trading above its 50-day moving average, with volume running 15% above the 20-day average on Friday's broad market rally. The stop loss sits 4% below Friday's close if geopolitical headlines reverse the risk-on tone. The target is plus 2% to plus 5% over the 5-day hold, as IPO-related volatility lifts bank desks. Confidence is medium because of the strong fundamental catalyst from the IPO calendar, but a single factor setup without confirmed volume follow-through into next week. We'll track this all week and evaluate on Friday. Yesterday's trade was LLY with a catalyst entry on next-generation obesity drug data extending market leadership. We simulated buying at $1,159 on Monday's open and exited at $1,160.95 on Friday's close. The position gained 0.17% or $1.68 on a $1,000 simulated stake. The NASDAQ rose approximately 2.5% over the same window, producing negative alpha of roughly 2.3%. The obesity drug catalyst produced minimal follow-through once broader market rotation into financials and away from healthcare took hold. This teaches us to require both a fundamental catalyst and a volume spike above the 20-day average before committing capital to healthcare launches. Benzinga Pro's sector-specific screens let users filter energy, gold, and semiconductor names by revenue growth and analyst revisions in real time. Canadian investors can use the 14-day trial to build custom watch lists that feed directly into TFSA rebalancing decisions without paying full subscription cost. The edge comes from seeing which names are moving on volume before the broader market reacts. Interactive Brokers provides free real-time option chains and probability calculators that show covered call yields on any TSX or NYSE name. Users can model a 30-day covered call on a position already held in an RRSP and see exact premium income before committing capital. This tool is especially useful for income-focused investors who want to quantify rent on existing holdings. The Canadian apparel retailer Roots reported 6.5% Q1 sales growth. It marked the 7th straight quarter of comparable sales gains. The company provided a business update alongside the results. This performance could position Root for consideration in TFSA portfolios. Add Root to a small-cap Canadian watch list for potential TFSA re-entry on any post-earnings dip. Source: financialpost.com. Bumper IPO issuance is expected to lift second quarter trading revenue at Goldman and Morgan Stanley. Rotate 2% of equity sleeve into XLF on any Monday open below the 50-day moving average. Open your brokerage platform, pull up XLF, and check the 30-day average trading volume versus today's volume. If today's print is at least 20% higher, add XLF to your Monday morning alert list. Our simulated portfolio has completed 34 trades with a 59% win rate, 20 wins, 11 losses, and 3 break-even results. Cumulative profit and loss stands at $396.68. Average return per trade is 1.17%, with a best trade of 20.11% and a worst trade of negative 11.35%. The current streak is 1 win, and our AI analysis continues learning from sector rotation patterns. Imagine you bought shares of a newly public company on its first trading day at the offering price. Your order filled cleanly, but the real supply pressure arrives 180 days later when insiders can sell. The mechanism works through staggered release schedules where early investors and employees face sequential lockups that create predictable volume spikes, often pushing the stock 8 to 15% lower in the week before each tranche expires. Most retail investors assume the post-IPO pop is permanent and get caught holding through these engineered supply events. Professionals always check the S1 filing for the exact lockup language and set alerts 10 days before each scheduled release. The biggest mistake is treating the IPO price as a floor. Instead, always map the full lockup calendar before sizing any position. Before we wrap, check XLF volume on Monday for any follow-through that could extend the rotation thesis. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Fascinating Frontiers a listen. The most fascinating news from space and science. You can explore the whole lineup at neuralnetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?